Hi, this is the video about new pension scheme that is being discussed for higher pension announced by EPFO. What are the parameters? There are so many discussions are going on this. The date has been extended from May 3rd to the month of June now. And what are the pros and cons towards going for this, and what is in stake for employees, whether it is beneficial, whether this scheme can be taken up by people already retired, or is it beneficial for youngsters who just joined. So we will see through this information in this video. This scheme is applicable to people who have joined earlier and working now from 1/9/2014 onwards, or they are still working or retired. What are the advantages? 15,000 is the present ceiling for the salaried class, from where the EPF option is being taken. The present ceiling is 15,000. Employer pays, you can earn maximum of 7,500 rupees per month. So here now the calculation is basic plus DA. In that 8.33% has to be contributed. How much will be the return? So what is the return? How we can calculate the return on this employees provident fund? How much pension I will get? It is calculated like this. Last 5 years of 60 months of average basic plus DA into number of years you have been into this EPS scheme. Like if supposing you joined in 1995, up to the date of retirement will be the number of years. In my case, my organization has joined in the month of September 2014. So from then onwards, till the date of my retirement, will be the number of years I have been into this employee pension scheme in case I opt for it, divided by 70. What is this 70? 70 looks at a different number. 70 is termed as the life expectancy of every individual Indian now, and hence this number is being taken. So the calculation goes like this: 60 months average basic plus DA into number of years you have been into this EPS divided by 70 is the return you will be getting. Supposing you are taking monthly DA basic detail, it will come as a monthly pension amount totally, or annual detail will come, you have to divide it by 12 to arrive at the monthly pension. So what is this higher pension scheme? What is that we need to look into it? It benefits individuals who want higher monthly pension but do not require a huge lump sum upon the retirement. The last date to apply for this is 26th June 2023. Now the date is extended. It is 26th June 2023. What is the benefit if you opt for this? It gives much needed financial security and peace of mind as far as retirement expenses are concerned. It allows the principle of saving first and then doing the expenses. Besides, it's very attractive and beneficial scheme for the retirees. So what is the maximum pension that can be available, minimum pension that can be done? It is mentioned 1,000 to 2,000 can also be given as a monthly pension on this. EPF, on the contrary, gives you lump sum amount during retirement. So what is that you need at the time of your retirement? If it is 58 or 60, what is that you are looking for? Are you looking for a lump sum payment amount, or you are looking for a pension that can go along with the life of your entire lifespan, post which 50% will go to the spouse. In case you have a minor children, they will get 25% after your demise. So this is how the EPS's employee pension scheme is designed. EPS schemes gives your pension, which is lifelong income, To get 50,000 income, for example, supposing you are a youngster, you are planning for a 50,000 monthly income, invest around 11,000 to 12,000 rupees per month for a period of 25 years to start earning pension in the next 30 years. Supposing you are 30 now, you can start investing 11,000 to 12,000 rupees in EPS on month basis. Both EPF lump sum and EPS are taxable. For your information, both are taxable. There is no tax exemption on this. Supposing you are requiring 30,000 pension per month, invest 5,000 per month for 10 to 15 years time. So this is a rough calculation by which you can think of investing into this employee pension scheme. How much to invest? Is there a maximum cap for investment? Yes, it is 8.33% of basic plus DA. You should be planning for this investment. How dues will be calculated? Like, I don't have, say for example, in the PF, now the calculation, I will give the calculation in the description. You can work for your individual basis. You have to feed month on month basis in that. Only then you can arrive at. I have also taken into consideration that 1.16% higher percentage that is being recently deliberated by Supreme Court and EPFO. The verdict is yet to come whether it will be paid by the employer or by the employee. But for calculation purpose, I have included that also into the calculation, which I am giving it in the description. You can work out for your own self. It should be calculated on the month wise in the following manner. A. 8.33% of employer's share on higher actual pay with effect from November 16, 1995, or the date the pay exceeds the wage ceiling, whichever is later. Wage ceiling is 15,000 rupees, which we discussed earlier. B. Point B. 1.16% of employer's share on higher pay above 15,000 with effect from September 1, 2014 towards the increased contribution to be worked into. So point A is 8.33% of employer's share to be calculated, which can be from November 1995 or from the date of becoming eligible for when the pay exceeds the ceiling, or the date on which the entry is done by the employer into this employee pension scheme. Point number 2, it is 1.16% of the employer's share on higher pay above rupees 15,000 rupees with effect from September 1, 2014 towards increased contribution. So the calculation goes, point number C. All deposits already deposited into EPS account will be deducted from the sum of A and B mentioned above. 1,250 is the amount that normally goes for all individuals into EPS account. So that amount month on month will be deducted while calculating the remaining amount to be paid into this employee pension scheme. Point number D. Historical interest rate announced by EPFO will be taken to calculate the interest amount that must be taken back from EPF account to recover the accrued interest on past missing EPS contributions. So whatever interest has been paid onto the EPF account, since we are going to have take it out from the retrospective effect, so the interest also will accordingly be taken away from EPF account towards this EPS scheme. So these are the 4 methods by which the dues will be calculated. So what will happen once the dues are calculated by EPFO for higher pension? Once dues are calculated from the past, then field officer will inform pensioner or employee about the dues and any amount that needs to be deposited afresh or diverted from EPF account. That information will go to the employee through employer. The information is sent to the employee or pensioner through current or last employer with details of amount to be deposited with the EPF account to EPS account, that is employees provident fund account to employees pension scheme account. If balance is available in the EPF account, then EPFO will inform the amount that can be deducted to EPS, diverted to EPS. If there is a shortfall, then you need to deposit that shortfall amount. In case you have availed the PF amount for any purpose, you need to deposit that. Both are on the written consent and will be taken from the employee only. So you have to give the written consent in both the cases, either to deduct from EPF account to EPS, or freshly depositing in case there is a shortfall. EPFO will provide a breakup of total amount that is due towards the EPS account. So whatever amount that needs to be deposited also will be given to you. A. Amount will be diverted along with interest from EPF accounts. Along with interest because we are going to give a retrospective effect of this transfer. B. Amount that must be deposited by EPF account holder along with interest in case you don't have a balance. So both will be announced and then you need to accordingly act upon. What is the time limit to deposit money or give consent? EPFO will allow 3 months for employee to deposit money and give consent for diversion of money from EPF to EPS account. How additional money will be calculated? Will be deposited. Supposing you are informed that you need to deposit additional money, how will that be deposited? The amount will be deposited by pensioner from the bank account available in EPFO records. Normally it will be a salary savings account will be linked to EPFO record. To make the deposit, an online facility will be provided by Employee Provident Fund Office. So EPFO will give you an online link to make the deposit. Pensioner can also issue a check in favor of Regional Provident Fund Office. The check should have the following detail: application ID for conversion from EPF to EPFO, EPS account. That application ID should be given. Number 2, UAN should be given. Number 3, name and mobile number to be given. Number 4, demand notice number and date should be provided for them to match your deposit to respective EPS account. So these are the formalities that needs to be completed. Okay, in a nutshell, is it beneficial or not beneficial? Each individual should do the calculation, and I have given the calculation chart in the description. You can feed month on month basic and the DA along with that in the column, and then arrive at the amount to be credited. Deduction of the earlier amount which is already paid, that is 1250 roughly given by each employee, will be deducted and the exact amount will be arrived upon. 1.16% also, the higher amount that's being deliberated also worked on this particular chart for your comfort. Make an informed decision, and then for a peaceful retired life, please take medical insurance and then go for the pension option, which is very essential for every individual. Thank you very much for patiently watching this video. Subscribe and support to Kripa Vibes YouTube channel. Bye bye.